Hey everyone, have you ever noticed how some stocks move quietly and then suddenly everyone is talking about them? Right now, there's a company sitting in the small cap space that's starting to attract attention from traders, retail investors, and even some bigger players. And the interesting part? Most people still don't fully understand what's actually happening behind the scenes. Today, we're diving deep into Dvlt, and more importantly, we're asking the real question. Is this early momentum or just another temporary hype cycle? Let's break it down carefully. First, let's talk about the revenue story. One of the biggest reasons this company has started appearing in conversations is the dramatic jump in reported numbers. When a company shows explosive revenue growth, especially triple-digit or even four-digit increases, it grabs attention immediately. But here's the thing. Big percentage growth doesn't automatically mean a strong foundation. Sometimes, a small base number can make growth look massive. So instead of just focusing on headlines, we need to look at sustainability. Is this growth coming from long-term contracts? Is it recurring revenue? Or is it one-time deals that could disappear next quarter? Because sustainable growth and temporary spikes are two completely different things. Now let's talk about positioning. The company is operating in a space that investors are already excited about: AI, data infrastructure, and enterprise solutions. These are buzzwords right now. Capital flows toward themes, and AI is clearly one of the strongest themes in the market over the last few years. But theme alone isn't enough. The real question is execution. Are partnerships translating into real revenue? Are projected targets realistic? Is management overpromising or underpromising? Smart money doesn't just look at press releases, they look at delivery. Another thing to consider is market psychology. Small cap stocks can move very aggressively. When volume increases, price can spike quickly. But the same way it goes up fast, it can also come down just as fast. Volatility is part of the game. So if you're watching this stock, you need to ask yourself something important. Are you investing based on fundamentals or trading based on momentum? There's nothing wrong with either strategy, but confusing them is where people get hurt. If you're a long-term investor, you need clarity about cash flow, debt levels, dilution risk, and scalability. If you're a short-term trader, you're watching volume, technical levels, and sentiment shifts. And right now, Dvlt sits in a very interesting middle ground. It has enough excitement to attract traders, but also enough narrative potential to attract speculative investors. That combination can create powerful runs, but also sharp pullbacks. Another important point is expectations. When a company sets ambitious revenue targets, especially something like aiming for hundreds of millions in the near future, expectations rise dramatically. And in the stock market, expectations are everything. If a company beats expectations, price can explode. If it misses, even slightly, the reaction can be brutal. So managing expectations becomes critical. Let's also address risk. Every small-cap growth company carries risk: liquidity risk, execution risk, market risk. Broader economic conditions can also impact performance. If interest rates shift or market sentiment turns bearish, speculative names often feel the pressure first. That doesn't mean opportunity isn't there. It just means position sizing matters. Never risk what you can't afford to lose. Now here's something most people overlook: timing. Even strong companies can have dead money periods. Just because fundamentals improve doesn't mean the stock moves immediately. Sometimes the market takes months to recognize value. Patience is a strategy too. So where does that leave us? We're looking at a company that's showing aggressive growth signals, operating in a high-interest sector, and beginning to gain traction in online investor discussions. But we're also looking at a small-cap stock that will likely remain volatile. That's the balanced view. No hype, no fear, just facts. If you're considering getting involved, do your own due diligence. Read filings, understand financial statements, know the float, know the dilution history. Don't rely only on social media excitement. The market rewards discipline more than excitement. And remember, Sometimes the biggest gains come from entering early and holding through noise. Other times, the smartest move is waiting for confirmation. The key is knowing which strategy you're using before you press the buy button. So now I'll ask you, do you see this as an early stage growth opportunity? Or do you think this is momentum that could cool off? Let me know your thoughts. And if you want deeper breakdowns like this, where we cut through hype and focus on structure, make sure you stay tuned. Because in markets like this, information isn't just power. It's protection. This is not financial advice.